Assalamu alaikum everyone, and welcome to this webinar on calculating zakah on modern financial assets. There's a lot to learn about zakah, the obligatory charity owed by Muslims, and this presentation will provide a brief overview of who should pay zakah, what types of property it is owed on, and how to calculate it on certain assets. So I'll just take a moment to introduce your presenters for today. We're joined today by Azzad's President and CEO, Bashar Qasim, who is a certified Shariah advisor and auditor, one of the few in the U.S. who holds that distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Azzad. I'll be giving the main presentation today, and then Bashar will be available to answer questions at the end. So moving on, before we begin, we want to give you a little bit of information about Azzad Asset Management, just so you know where we're coming from when we talk about zakah. So on your screen, you'll see 7 of the services that Azzad provides for our clients, and these include calculating purification and zakah amounts, which is the topic of today's webinar. Azzad follows Halal investing guidelines from AYOFI, the accounting and auditing organization for Islamic financial institutions, and the zakah calculation guidelines in this presentation follow AYOFI rules. So AYOFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of Islamic thought. But please note that this presentation is not intended to be comprehensive in all schools of thought. We at Azzad take Sharia governance and compliance very seriously. And in keeping with the guidelines from AYOFI, we have an active Sharia advisory board and an in-house Sharia auditor who is our CEO, Mr. Bashar Qasim. Additionally, our zakah and purification calculations are audited for accuracy by a third-party verification firm, the Islamic Finance Advisory and Assurance Services, or IFAS. Here is Azzad's 3-member Sharia Advisory Board, Dr. Ash-Shubaili, Dr. Az-Zahidi, and Dr. Abu Ghudda. And these individuals really are luminaries in their field, and they provide guidance to the company on matters of Sharia compliance, reviewing the process for calculating zakah and purification, and providing rulings on religious financial matters where there's no precedent from AYOFI. This webinar is intended to provide a brief overview explaining the general principles of zakah calculation, and you can always learn more by contacting us at 888-86-AZZAD. So now let's turn to today's topic, which is zakah. So first, let's understand the basics of zakah. Zakah is a financial obligation on every Muslim who owns certain kinds of assets worth more than a set amount called the nisab if they have owned that asset for at least 12 lunar months called the Hawl. Zakah is mentioned in the Quran 81 times, and it's often mentioned along with salah or prayer. While giving to charity is a financial transaction, it's an integral part of a Muslim's spiritual health, and specific care really should be given in making sure it's handled correctly. Zakah is an opportunity to bless your wealth by giving it to help those in need. Zakah is obligatory on every living Muslim, regardless of gender, age, or mental status, who owns assets that meet the other conditions of zakah. However, if certain conditions are not met, then it does not remain compulsory. So let's take a look at the conditions that must be met before zakah becomes obligatory. I'll just list them now, and then we'll explain them in the next few slides. So the conditions are owning at least the minimum amount of wealth, or nisab, the lapse of 1 lunar year, the complete ownership of the assets by a particular person, there should be no other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. So first, the total amount of wealth owned by an individual must meet a minimum threshold called the nisab. While prophetic hadiths describe the threshold of nisab for different assets such as gold, silver, and livestock, the question is what nisab is relevant on our modern financial assets. The nisab can be determined based on the nisab of silver or gold, and this is equal to the current market value of 85 grams of gold or 595 grams of silver. And according to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and the end of the year, and changes in between are overlooked. Any increase of property after reaching the nisab during the year is to be included in the total sum counted for zakah. This is considered the easiest and most applicable among the other juristic views, which has made the majority of scholars accept it. The value of 85 grams of gold earlier this year was around $4,700, and therefore any Muslim who owns zakatable assets worth $4,700 or more and has held these assets for at least 12 lunar months should pay zakat on those assets. And we'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount, or the nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. And the Arabic word hawl refers to this holding period of one lunar year after which the zakat becomes due. Zakat al-mal is not due on a particular day for everyone, but it should be paid at least once per lunar year. And many Muslims choose to pay their zakat during Ramadan, both for the additional blessings of giving during this month and also just because it's an easy time to remember from year to year. Each individual can set their own hawl dates based on when they have had zakatable assets for a minimum of one lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage of zakat is raised up to 2.577 instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar year. So what defines complete ownership? There are 5 factors that define complete ownership: settling, ownership vesting, accessibility by the owner, disposable by the owner, and it should have no interference by others. Before we discuss how to calculate zakat on growth stocks and income stocks, let's briefly recap the kinds of accounts that can hold stocks first. For these accounts, we should refer to the conditions of zakat to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but they may have to pay taxes or a penalty when withdrawing. For accounts with full ownership, zakat is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, like current 401k accounts where a participant is not enabled to withdraw money, there's no zakat due since ownership is not complete. The third condition that must be met is that the assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable, and zakat is liable on the assets that are completely owned and vested for the owners. So complete ownership requires that assets be accessible and disposable by the owners without the interference of others. If you completely own an asset but would have to pay taxes or penalties if you sold it, that does not nullify the fact that you still own it. So for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty and taxes if they sold it before reaching the retirement age. This fact does not prevent the IRA from being zakatable, but zakat would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee cannot withdraw from a 401k or 403b account at their current job if they're below the distribution age. This 401k or 403b is not zakatable until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. And if you're unsure whether you're unable to withdraw money from your 401k, I would say you should read about your plan's provisions in your 401k's summary plan description, which you can request from your employer. A person must also be solvent in order for zakat to be due from them. So if a person has debt that is immediately due, that is greater than what they own, then they're not liable for zakat. Assets that are zakatable include gold and silver, cash, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakat at 2.5% based on their values on the day of the hawl. And of course, if the hawl is linked to the solar calendar, zakat is 2.577%, again, to make up for the difference between the two calendars. There are certain assets on which zakat is not owed. So assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves. However, the income that is derived from them, if it is held for one lunar year and meets the nisab, then it becomes zakatable upon, again, meeting those conditions. Furthermore, personal use property is not zakatable. And this includes one's personal residence, their vehicles, clothes, and any other personal belongings you might have. Only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, pork, stolen money, bribe money, or any other kind of impure money. Such assets or money should be returned to their lawful owners or donated to charity as purification. And purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that you never intended to benefit from. In modern financial times, this includes securities or stocks which are deemed not to be halal according to Sharia investment guidelines, including financial options and derivatives. And of course, we at Azzad use halal investment guidelines established by AYOFI and adopted by the Azzad Sharia Advisory Board. Finally, assets intended for retained ownership and for the purpose of deriving income are not zakatable. This means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, income derived from them is zakatable, as is the case with capital goods. For example, zakah is not paid on the market value of a rental property. However, income that is derived as rent and is held for a halal period is zakatable. In calculating zakah, we start with the zakah base, which equals all zakatable assets minus liabilities or debts that are payable by the halal date. And zakah is not obligatory on wages, salaries, and income at the time when that income is received. Again, zakah is assessed based on conditions we discussed earlier, and they have to meet the ownership and halal period requirements. In the next slide, let's look at how debt relates to zakah. If you make a loan, you owe zakah on any amount repaid as of the halal date if it's in good standing. If the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years that it was in bad standing. So if you have taken a loan and owe debt, the amount due before the halal date is deductible from one's zakah base. However, debt payments that are due after the halal date are not deductible from the zakah base. So let's take, for example, a person who might have a current home mortgage payment. They can deduct the current home mortgage payment from their zakah base, but not the entire loan. And the interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets from one's zakah base. This relates to modern financial assets since bonds are also a form of debt. However, interest-based debt securities like bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount of the market value, whichever is lower. And any gain due to interest accrued on or market appreciation is not recognized as lawful and is not eligible for zakah. So such gains should be considered unlawful and they should be purified by donating to charity. If you make a loan, you owe zakah on any amount repaid as of the halal date, if it's in good standing, and if the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all years it was in bad standing. Now, looking at debt you owe to others, if you have taken a loan and owe debt, the amount due before the halal date is deductible from one's base. Again, however, debt payments that are due after the halal date are not deductible from the zakah base. Zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the nisab, the minimum amount of wealth after which zakah is due. This, of course, excludes any interest income that may have been unlawfully earned during that time. Many of us acquire money at different times throughout the year, from salaries, inheritance, gifts, rental income. And if you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the changes and pay zakah for each amount separately once 1 year has passed from the date on which you took possession of it. But an easier method is to pay zakah on all the cash you've held for 1 year since reaching the nisab. This will bring you a greater reward and raise you higher in status. And it's easier actually, and it's more generous towards the poor and needy and others who are entitled to zakah. So for example, if 1 year ago you had $10,000 in your account and the value dipped mid-year to $5,000, but now you have $15,000 in your account, With this method, you would pay zakah on the $15,000. In the next section, we're going to be talking about zakah on stocks. So we've gone through who is liable for zakah and what assets and accounts and account types are zakatable. So let's talk now about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azzad know that we calculate their zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you can acquire. For the purpose of the explanation, we'll assume that the stocks follow halal investment guidelines since, as we discussed before, zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock or for the income or dividends it can provide. With this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. While a shareholder may reap the benefit of both growth and income from a particular holding, the original intention of why it was purchased is the key. So unlike taxes, we don't have the IRS looking over our shoulder, but since zakah is a matter between yourself and God, your intention regarding your investment determines which calculation to use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on income stocks and the zakah owed on growth stocks. So you might be wondering why differentiate between growth and income stocks. Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading, and they're considered commercial goods, or in Arabic, arud tijara. Arud actually means any non-cash assets, and tijara refers to items that are intended for profitable trading. For these shares, their zakah base will be based on the total closing market value of the shares owned, or the net asset value on the Halal date. And then that net asset value is multiplied by 2.5%. To give you an idea of how a zakah calculation on growth stocks is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the Halal date. To calculate the zakah, we must account for a 10% penalty if the person is under the age of 59.5, and also the tax bracket. So assuming this person is under 59.5, they're in a 15% tax bracket, we calculate the zakah by multiplying 50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. So this gives us the zakah due on the amount they would have had in hand if they were to withdraw from their IRA. Now let's talk about zakah on stocks intended for income. Stocks held for the purpose of deriving income, such as dividends, are different from arud tijara, since the primary intention of purchasing these shares is not for trade and appreciation. The zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. So in this case, we must look through to the underlying company's balance sheet. The portion of company assets which are used for income generation, such as capital goods, properties, or equipment, are not zakatable. However, other assets that the company might have on their balance sheet, such as cash or inventory, are zakatable. So say, for example, any such company might have, for example, 80% in assets that are not zakatable and 20% that are zakatable. So then any current debt and long-term financing of zakatable assets is subtracted from the zakatable assets, and then this is then divided by the number of outstanding shares. This then leaves us with the zakah base, or the zakatable assets per share. Now we understand that the calculation on income stocks is not as simple as growth stocks, and it's one of the reasons why we calculate this for our clients at Azzad. In the next slide, we just want to send a reminder about the categories of people or the causes that are eligible to receive zakah. And interestingly, the difference between the masakin, which are the needy, and the fuqara, or the poor, is that the poor have actually nothing, but the needy are actually those who have something, but not enough to live decently. So in this case, the masakin, or the needy, had more than the poor, but they still lack adequacy. And Allah subhanahu wa ta'ala actually referred to the masakin in the Quran in Surah Kaf, and the story of Khidr and Prophet Musa alayhi salam. and mentioned that the masakin were the poor people who actually owned a ship, and they were the ones that actually worked in the sea. So they were working people. In the next slide, we just want to kind of talk a little bit about more about eligible recipients. And this year, many American Muslim organizations and individuals are struggling financially in the face of the coronavirus pandemic. And some mosques, many of which rely on in-person donations to meet a majority of their monthly revenue needs, fear that they could be forced to end operations as giving is drying up due to social distancing and lockdown orders. So at Azzad, we're trying to encourage our clients to consider donating to these institutions that have been hard hit by the coronavirus crisis. As financial advisors, we also become intimately aware of financial concerns and stresses in our community. And a few pressing causes our clients have highlighted include restoring artificial human limbs to poor victims of war, financially supporting imams and Islamic center staff so that they can have a decent living, helping poor Muslim youth that are battling mental illness and spiritual decay, educating and introducing the message of Islam in the U.S., and helping the homeless and refugees. So next, let's talk briefly about purification, which is different from zakah when we're talking about investing. So part of the process of making a stock investing halal is screening those companies in their lines of business as well as their financial ratios. And these are some of the screens and ratios according to AOP. However, sometimes it's not possible to know exactly where all of a company's revenue comes from, or the revenue is a trivial amount. So in the next slide, we're talking more about, again, purification. Because of this, Muslim investors should purify their investments by donating to charity the small amounts that may have come from an impermissible source. Purification, again, is different from zakah, and it should be calculated and deducted before calculating zakah. In reference to purification, Abdullah bin Umar, who is a companion of the Prophet Muhammad and the son of Umar bin Khattab, said, "To return 1 dirham of haram is more beloved to me than paying sadaqah of 100,000 dirhams." And actually, he continues to adding that another 100,000 dirhams and another 100,000 dirhams until he actually reached 600,000 dirhams. So this just emphasizes the importance, really, that purification plays. In the next slide, we just want to give some tips. Before giving money to a charity, you want to make sure the organization is legitimate and your donation will actually reach those in need. So here are some tools that you could use. The IRS Nonprofit Charities Database has a tool called the Exempt Organization Select Check Tool. And this tool actually allows you to enter the name of an organization and see if the organization is exempt or not. And it's important to verify that an organization that claims to have 501c3 tax-exempt status is actually exempt. Because if the organization is not exempt, your donation will not be tax-deductible. Also, Charity Navigator rates charities based on their financial health, accountability, and transparency to help donors make informed decisions about their contributions. Now, Charity Navigator has evaluated over 8,000 tax-exempt charities. So if your chosen organization is not included, you should be sure to find out why. And finally, GuideStar maintains information on 501c3 nonprofits. And financial documents such as the 990 can help you evaluate the legitimacy of the organization. The 990 discloses where and how an organization's donations are spent, including the earnings of their top officers. And all nonprofits are required to have up-to-date 990s available to the public. So if an organization does not have this info readily available or is not forthcoming if you request it from them, you may want to reconsider your donation. So this next section, we're just going to go through a quick pop quiz on zakat calculations, hopefully to just reiterate and emphasize some of the points that we discussed. So in question 1, we have Abdullah, who is a 45-year-old engineer who has a 401k plan with his employer, Kenwood Corporation. The market value of the plan on his zakah or howl date is $100,000. His 401k contains stocks for capital appreciation only. Abdullah's tax rate is 30%. He's not in debt and he's fully vested in the 401k plan. So in this case, how much does Abdullah owe on zakah on his 401k? So as you think about that, I'll go ahead and give you the answer. The answer actually is D. The 401k is not zakatable because he actually cannot withdraw the asset. So again, remember, if you're unsure about your 401k, if you're currently employed, likely the case is you aren't able to make a withdrawal, but you can definitely check that in your 401k's plan summary description. Let's go to question number 2. Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000. While she's seeking a good sale price for the house, she received a year's rent on the house totaling $30,000. The market price of the house is $500,000, and Khadija is not in debt, and she kept all the rent money for a year. So how much zakah is she liable for after 1 year? Now, in this question, there's a lot of different parts. Her original intention was for trade and appreciation. Although she actually rented the house, the answer is actually A, 2.5% of $530,000. Because again, this goes back to her original intention, which was actually to acquire the house for trade and appreciation. And she also held the income for the full lunar year. Let's go to question 3. Ahmed was given a BMW as a bonus from his employer, and now he's deciding to sell. I actually decided to sell his car, when he received it, but it took him 14 months to sell the car. So how much zakah does Ahmed owe on the car? Now, in this question, the answer is C. No zakah is actually owed on the car. In this case, the car is not a commercial asset, and it was acquired. It was not a commercial asset that was acquired with the intention to trade. So again, we're going back to the intention of the person, and again, he never intended to trade this for profit. In question number 4, Yusuf is a key employee at Cisco and was given options to buy 10,000 shares of Cisco at $10 a share. A month before the Halal, the price of Cisco reached $30. Yusuf then exercised his options and purchased 10,000 shares of Cisco. So how much zakah does he owe on these shares? Now, in this case, the answer is D, because we have to remember that he did not own the shares for more than a year. And we'll go through our last question here. Hassan just found out that his advisor at Morgan Stanley had invested his accounts in bonds, which earn money only from interest. He had bought the bonds for $10,000, but now they're worth $11,000. And the bonds are 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. How much zakah does he owe on them? And again, in this case, the answer is A, 2.5% of $10,000, because again, the zakah is due only on the principal since the interest gain is not halal. So with this, we will come now to the Q&A portion of our presentation. There is a panel here for you to be able to type in questions, which we'll be happy to answer. And we have with us Bashar Qasim, Azzad CEO, and a certified Shariah auditor and advisor to answer questions.
Thank you, Fatma.
So we're waiting again for some questions to come in. So please feel free to go ahead and type those questions in. Bashar, one common question that I know we get is about zakah on a real estate asset. So someone has purchased real estate, for example. How should they calculate zakah on it?
So real estate, we need to look at the type of these real estate assets. What is the purpose of owning these real estate assets or purchasing these real estate assets? If the intention is to trade them, buy and sell, as many people do these days, they flip houses, they buy it, fix them, etc. So that's clearly the category of these assets would be treated as urud tijara, because the intention is to buy and sell to make a profit, and that's what really the tijara is. So in this case, those would be zakatable at the market value at the date of the hawl. Now, if the person used finance, debt, to finance these assets. Since these assets, as you mentioned, they are zakatable as urud tijara, he can deduct the zakah base. He can deduct the amount of that from the zakah base and pay the zakah on the net. However, if the person owning the house for other than trading it and deal with it as urud tijara, flipping the houses, buying and selling, then these houses, they're not urud tijara, so they're not zakatable at the market value. Now, it doesn't matter whether this is a second home or your home, or maybe a home that you purchased it to rent it and derive an income from it. The one that we rented and derive an income from it, you know, the house itself is not zakatable, but any income, any rental income you derive from the house, that is zakatable only the amount that lasted with you the house. So if you spend it, there will be no zakat on it. Like some people, they buy houses, they get rental, they create cash flow, and they use that money somewhere else, maybe to buy another house, and etc. So if that money doesn't last the full haul, that's not zakatable. So actually, in the rental houses, they are the house itself is not zakatable. It's not like the urud tijara. And now also you need to keep in mind, because these are not zakatable, the debt that you used to buy the house, the debt that you incur, the mortgage to buy the house, this is not deductible from the zakatable base. So let's say you have a cash, like you have about a $500,000 cash, and you have this house that you purchased it, but you purchased this house with a $200,000 debt. You cannot deduct the $200,000 debt from your other zakatable assets that you have. Why? Because when we didn't use this debt to really buy the house. So that's really the full picture about, you know, how you pay the zakat on the houses, taking into consideration the mortgages and the debt instruments that are available and used by many real estate owners.
Okay. And just a follow-up question about that was also about, what about the expenses for the rent? So if they're receiving the rent, it's an income property, they're receiving the rent, they're paying expenses, they're only paying zakat on what they've held after all expenses and everything, after 1 lunar year.
Yeah. Okay. Something I want to point out here, zakah is actually, it's a balance sheet item. We look at the balance sheet, we look at what assets, even if you earn the money from any type, any income that you derive from any property, that if it lasts for 1 lunar year, that becomes actually part of your assets. So these are zakatable. But you know, the expenses, if there is any expenses that is due before the haul, of course, that's like a debt. You can reduce it from your zakatable base. Only the expenses, let's say property tax, for example. Yeah, property tax that they are due, that can be deducted from the zakatable base, from, you know, from other assets that you have, because that's a debt, and that is due. Expenses, insurances, etc. All these assets that they're really incurred, because some of them you already paid it, so it got out of your zakatable assets, got out of your balance sheet or out of your bank account. That's because everything goes through the bank account. That's how you pay the expenses. So that already reduced your zakatable base by the amount of expenses that you paid. But if there is anything that you didn't pay and it's a due before the haul, of course, that can be reduced. Okay. Because, you know, the scholars, they refer to this la sadaqata illa an dhahri ghina, like the zakah is paid on any items on the net, after you taken, you know, the zakatable assets minus the debt that is due before the haul.
Okay. So we have another question. I was recently let go from my employer in December 2019, and I moved my 401k to an IRA in February 2020, and I remain unemployed. So do I owe zakah on the IRA held less than a year?
Yeah, usually you need to stay the full lunar year before this money becoming zakatable. So from your haul starts from the moment you were enabled to take that money out, or the moment that you took when you rolled over that money. So sometimes some people, maybe they leave their job, they're becoming enabled. So the haul starts from the time you were enabled, not from the time that you rolled it over. Because once you were enabled, that means now the ownership is complete. So the haul starts from that moment, and then you count 12 lunar months. But I advise usually people to set a haul for all their assets. So sometimes you may want to prorate that amount, that time, to make it. Most of the people, they like to make their haul, for example, first of Ramadan or maybe a week before Ramadan. But this is something really to consider. And then once you are enabled, then you start paying the zakah on the type, on these assets. Again, as Fatima said, taking into consideration any taxes or penalties or stuff of that sort.
Okay. Another question: can you avoid taking from an IRA where there will be a penalty by doing a larger zakah from another account, saying a checking account? So if you owe zakah, for example, on one asset, can you pay the zakah from another asset?
Absolutely, the zakah will qualify to pay it from other assets that you have. They call it. It doesn't have to go by ayn, by the exact, but it can go by mithil. Scholars, they refer to it as zakatu bil mithil. So you take from other assets similar to pay the zakat. Yeah, that's acceptable. No problem.
Okay. And then another question: I am retired and I use the earnings from my mutual funds for my living expenses. Do I need to pay zakat on my mutual funds since I use it for my retirement income?
Yes. So again, you need to look through the mutual fund and see what is the strategy, what is the intention of the portfolio manager. If the portfolio manager buying and selling to achieve, to benefit from the price appreciation of the stock, then those stocks within the mutual fund, knowing that they are really Sharia compliant, those are zakatable at the market value. But if there is a portion of the fund that invests to derive an income, those are the zakatable at the balance sheet of the attributed to the share of these particular companies. So that needs to be calculated. But if really difficult for you to go through this, you may want to look at the overall objective of the fund. So sometimes you can see that in the mutual fund under the strategy or the objective. They'll tell you the objective is capital appreciation, income, capital preservation, those type of those. But again, taking a regular mutual fund, you have to go through this because you may find some assets there that that they're not zakatable, like maybe shares of banks or companies, unless it is really a halal fund that follow the Islamic guidelines. If that's the case, for example, there are many mutual funds there that they follow the Islamic guidelines, and based on the investment objective, you may want to take a look at the NAV, the net asset value of the share on the date of the haul. Take 2.5% of that, but again, you need to consider if there are any taxes due or penalties or any type of taxes, whether the income tax. Sometimes you may even find a capital gain tax, long or short, or realized or unrealized. Those also needs to be taken into consideration when you assess your zakah. Yeah.
And are 529 funds or college savings accounts zakatable?
Yes, 529. Those any type of assets where you're enabled to withdraw, even there is a penalty, those are zakatable. So you need to assess the zakah on that money. And if it's for the minors, the parents should really assess the amount of zakah on that money, and pay the zakah, from other assets, or maybe taking some of that money after assessing all the penalties and taxes and etc. And pay that money on that zakah. Yes, that these are zakatable assets and zakatable accounts. Now, going back to the question earlier, do you pay the zakah on an income? Again, the income, it will be joined. It will be joining your cash. I mean, if you have an account, you will find it as a cash if that's there. So of course, and if it lasted 1 lunar year, that money will be zakatable. But and again, it's not really, although we use the income as an intention, as a test to categorize the assets, how it's to be zakatable, we don't really use the income to calculate zakah. We look through at the balance sheet of the companies and we see, for example, what zakatable assets there. I'll give you an example. Like, let's say somebody buys Home Depot and he intends to own Home Depot because they give really nice dividends. So in this case, and he's not intending actually to buy and sell Home Depot, they want to hold it, to benefit from the dividends. So in this case, you go and you look at the balance sheet of Home Depot and you see like how much you have inventory for sale, how much cash, how much debt, as the formula that we shown, and then you calculate the zakah. And something that you really need to pay attention here, that the zakah on the income stocks and derived income, so most likely the amount of zakah will be much less than the zakah on the companies that you intend to benefit from the price appreciation. Yeah.
Okay. And going back to the question about the 529 plans, what about, a lot of 529 plans don't offer halal investment options. So what would you advise people to do in that case?
Yeah, that's really a problem. That's really a challenge. Unfortunately, 529, they don't give halal options, but there are other techniques that they can really partially fulfill your goal. You may want to use like the Coverdell. Coverdell, they're really, they're not bad solution. They're good solution if you couple them with the AGMA accounts or the ATMA accounts. Between them, you may find a good solution comparing to the to the 529. Unfortunately, 529, there are two types of 529. There is 529 where it's a lump sum that you pay money to the state and you have no control. That's it. In other words, you advance purchase of the college years in advance. Those are not zakatable because that's it, the money gone, correct? But the 529, which has an investment component where you can take that money and withdraw it, that's zakatable. By the way, the first one where the lump sum purchase, that's not zakatable, and there is no purification needs to do. You're not held responsible for the type of assets there because you purchased the college years in advance. That's fine. But the one that is 529, you're right, it's a problem. I don't know, like, how it's complicated, honestly, to look into these funds, especially if they use target funds, target days funds, where they're not using one single fund, they're using multi funds, and sometimes a fund of funds. It's becoming really overwhelmingly complicated. If I were you, I will just keep it simple. I mean, that's what I use for my children. I used the Coverdell and AGMA accounts, and they fulfilled the need. At least you have a little bit more flexibility than 529. You're right, the tax advantages, they're not as much as the 529, because 529 give you tax saving on the state tax, not on the federal level. But sometimes when I look at it, it may not really be worth it if you can have better control in your fund and you can manage it in a halal way.
Yeah, and again, it's difficult to discern what part is halal and which is not, which part you pay zakah on. Okay. Yeah. So next question again is related to again an account like a student college account. Is zakah owed on a student's college investment account if they're currently using the funds for college now?
Yeah, I mean, whatever amount of money you paid for the college, that's it. It's gone out of your zakatable base, out of your what we call the wa is zakawi. But the money that is there, although you're saving it for tuition, this is zakatable money. This is a money that you have full control, and you need to take into consideration zakat. I mean, and again, at 2.5%. You may want to have that money to be invested while you're waiting. Alhamdulillah, now you have options. you can invest it in a conservative way, maybe generate 2% to 2.5%, 3%. You don't want to be aggressive. That's enough to pay your zakah, maybe with a little bit extra money. Yeah. So, but that money is zakatable.
But you can subtract any current tuition, correct? So if you have any current
the
tuition
tuition,
you can subtract that
the
from your
tuition
zakat.
due, exactly. Tuition due before the Hawl is deductible from your zakatable base.
Okay. Another question in terms of going back to mutual funds and whether you calculate them as growth or income, how do you discern whether an investment, a mutual fund, a stock is, for income or for growth?
Look at the investment objective of the fund. They have the investment objective, and maybe you want to call the mutual fund company and ask them, how much of that you intend, how much of the assets that follow the income. Sometimes you may find a fund that is growth and income. So you want to ask, like, what is, ask the mutual fund company. They tell you 50-50, 45, etc. They give you an estimate of that. But actually, this is not the ideal situation. The ideal situation, if the company, if you may want to demand this from your halal mutual fund to really provide you this service, and dig a little bit deep and look at the companies they own, because the manager is the one who really is the best, because he's your agent, he's your wakil. So you follow his intention in this case. I mean, if you're really investing in a fund that is not lining with the intention of the portfolio manager, then that's something wrong. But the mutual fund company should be able to tell you. Unfortunately, if this is not halal fund, I don't know how you want to get this done. Maybe you use rough estimate, something like that.
And for our Azzad Wise Capital Fund, which is an income-oriented fund secured for capital appreciation, we do calculate the zakah base, so we can help you with that if you do own the Azzad Wise Capital Fund, because the intention of the portfolio manager is to drive income, so we can provide you with the zakah base for that fund.
Okay.
Next few questions on 401k. Thank you for the information, how to calculate zakah on 401k. How can you calculate zakah on 401k that you can withdraw with penalty? So let's say, and then another follow-up question again, relating to 401ks. This person is looking to leave their employer. When they leave, they'll have the opportunity to either leave the 401k in its current holding, roll it over to a new 401k, or withdraw it with taxes and penalties. And so what is the zakah in each consequence?
Yeah, I mean, if you leave it there, I mean, you can leave it with the 401k, although we advise all our clients not to leave any 401k assets there, because believe it or not, companies under certain circumstances may be able to tap into these assets. So we always advise, take control of that. But if you leave it there, this is accountable because you're enabled to withdraw it anytime. So again, you look at the total assets, and you see, like, if you are above 59.5, there is 10% penalty. You see yourself what tax bracket you are in, and you reduce all the potential taxes from your zakatable base, and you pay the zakah on the net. If you roll it over, the same thing, you can do the same. If you roll it over into another 401k, then again, you lost control on that money, and you cannot access it. I mean, that money, once you roll it over to another active 401k that you are participant, again, depends. The question goes back again, are you enabled to withdraw that money? Usually, if you are above age 60, most of the 401k plans, they will enable you to withdraw that money. So you can really take out that money, and that money will be zakatable even if you leave it. Just the fact that they give you access to that money to withdraw it, that becomes zakatable. Ownership is complete. But again, you reduce any taxes. Age 60 and above, you have no penalty, so just the taxes. Yeah.
Okay. So again, check with your employer what your plan requirements are, so you can know whether, again, you have the ability to withdraw or not. And of course, if you do end up withdrawing it with penalty and taxes, so let's say they leave their 401k, they cash it out, They pay the taxes and penalties.
Correct.
Then the zakah is then after you've held that asset for 1 year, correct? After
Correct.
meeting the 1 year.
Exactly.
Okay. Okay. So next question, it goes to the zakah eligible recipients. Are building mosques and civil rights organizations zakah eligible? What's your thought, Bashar?
Yeah, these questions, they were presented to many fiqh councils around the world, and under the broader sense of fi sabilillah, in the cause of Allah, masajid in non-Muslim countries, usually with many fatwas came in many scholarly conferences about zakah. These are very specialized conferences. They made the scholars cited that these masajid in non-Muslim countries, not in Muslim countries, that because they're really a way of doing the da'wah and fight stereotypes and racism and negative image. So that's the broader sense of fi sabilillah. So these are eligible for zakah. Civil rights groups, the same thing. So this is a way, the broader sense of fi sabilillah, and these could be even more effective than the traditional meaning of fi sabilillah. So these are really eligible for zakah, and that's what our Sharia Advisory Board at Azzad also adopt this fatwa.
Another question that someone who says they have several mutual funds that are leveraged funds, where they short the market. Are those funds zakatable and are they halal?
Yeah, those funds, again, shorting the stocks is problematic because this is like what we call bay'u ma la yamlik, selling what you don't own, and those are foul from an Islamic point of view, which you short the stocks. I mean, you sell it and you incur debt, correct? I mean, the whole thing is not really acceptable because you don't own it. When you short the stocks, you don't really own the stocks. So there is no zakat on something that you don't own. Margin, all these also margins, again, these are problematic because, you will be required to pay interest, and the interest on these margins are really hefty. They're not really cheap. Many brokerage companies make a lot of money by lending you, these money to do margin. So again, in this case, the things that you bought in margin, we go again to the same idea that if the stocks that you bought with margin, the margin here can be deducted. Only the principal, without the interest. Of course, you cannot deduct the interest. But that adds that complication. My advice is avoid margin because it is really involve paying riba or interest, because this is just simply lending and borrowing with interest.
So what should someone do if they are owning these in terms of zakah?
Well, first of all, get rid of the margin, and but if you own it and you have like a margin, again, you look at let's say some of these stocks that you bought, and these are halal stocks that you bought them, comply with the Islamic guidelines as adopted by majority of the scholars, how you can invest in these stocks. So in this case, if those are urud tijara that you intend to own, to sell at profit. So in this case, the debt amount can be reduced from the net asset value of these stocks. The portion that if you use margin to buy income stocks, again, you cannot reduce the margin, but because the stocks there, you pay it based on the zakatable assets within the balance sheet of those. It can get a little bit complicated, but that's the idea.
Okay. So in general, if the fund is not halal, then you do not pay zakat on it.
Exactly. The fund, you're right.
Right.
Yeah. There is no zakah on stocks like that they really deem to be non-permissible, like stocks of banks and companies that involve in alcohol, tobacco, gambling, stuff like that. There is the best thing is to get rid of those. I know many of the Muslim investors, they're not aware of it, but you really need to pay attention to those type of assets, because it's really problematic, because you're really replacing your halal earned money with haram mal. That's mal or wealth. It's really haram. It's really problematic. Even getting rid of it sometimes, like how could you sell it when it's really non-halal? It's really problematic. The best thing is really to avoid it, and if you are, then get rid of it and try to do your investment in a halal way, so you can really retain the barakah of this money. There is nothing really worthy than having a halal earnings of your money.
Okay. And another question about those who are unemployed. Are they still required to pay zakah, knowing that their savings are all they have to live on? I think we've kind of had a question related to this, but again, I think it's definitely pertinent given the time.
You're right. If it's really above the nisab, I mean, again, we have the nisab, and we said the nisab of gold now is what, about $4,000, the nisab of gold. So yeah, I mean, 2.5%. If it's really above the nisab, you don't want to take a risk with that. I mean, that's really the third pillar of our faith. Yeah, I mean, 2.5%. Zakah is not made to empower you. I mean, the person, if even after the nisab is still maybe he's not having enough, then he would be probably eligible for zakah. Yeah, but I would go with what the scholars agreed on, using the gold as the nisab. Yeah.
So we only have a few minutes left. I'm going to just try to quickly answer a few of these additional questions. Do you need to pay zakah from the year started retrospectively once ownership is acquired? So what if somebody missed zakah, like they owed zakah? Should they pay their zakah in arrears? Should they make up for their zakah?
Yeah. It's good. By the way, you can prepay your zakah, and if you remember, the zakah, it's really need to be paid the moment, right away. Should not be delayed the zakah for no reason. It would be sinful to delay the zakah. It's really actually. It is okay to prepay the zakah. You don't have to really wait until the haul. You can, some people, they have wealth. They estimate that their zakah will be probably like, $20,000 a year plus or minus. So maybe during the year, with the intention, they can prepay their zakah. The Prophet, peace be upon him, took the zakah from his uncle Al-Abbas a year and 2 years and 3 years in advance, because at that time they used to, it took a long time to transfer the money from one place to another. So that is acceptable to prepay the zakah and manage your zakah. You could also use a vehicle. Some people, they use donor advice fund, for example. Donor advice fund, they're really very viable way to manage your zakah. You can get your zakah. Maybe some people, they do it at the end of the year in line with their taxes. So they pay their zakah, that's fine. And then you can get that money, have it set it in a donor advice fund. And then later on, you can, once you do your research and you do your due diligence in your favorite charity that is eligible for zakah, you will be able to, distribute that zakah money right away. That is also acceptable, no problem. The only thing is just the zakah money should not be invested in a risky. It has to be very, very conservative investment, because it is short term. So don't get the zakah money and then you start investing that money and have the poor take the risk. If you intended that money to go to the zakah, you better pay it right away, and you better leave it in a very, very conservative vehicle, so the poor can get the value calculated for that zakah.
Okay. We have a few more questions. I know we're running out of time. We'll definitely try to get back individually to anybody whose questions that we weren't able to get to. There's we'll just go through a few quick questions. One, if I contribute to a masjid's operational budget to pay salary, utilities, can this be counted as zakah or is it sadaqah?
I'm sorry, repeat the question again.
If a masjid is again having financial challenges and somebody contributes to the operational budget to pay for salaries, utilities, would that be counted as zakah or sadaqah?
Without counting for zakah? I'm sorry again.
Would they be able to count any funds that they pay to a masjid for the operational budget? Can that be counted towards zakah, or is it sadaqah?
Oh, I see. Yeah, I mean, again, the broader sense of fi sabilillah, I mean, for the masjid, whether building the masjid or funding the operations of the masjid, they're here in the US, they're non-profit organization. And yeah, so whether it's for the, funding the masjid or as an institution to carry its purposes, yeah, of course, yeah, that will be counting for the zakah. So any money you paid for the staff, for the operations, etc., yeah, that will count to your zakah. So you can deduct it when you figure out your zakah at the end of the howl if you paid in advance.
Someone's asking, can one invest in a domestic or international stock as long as it meets the requirements of halal investing? I'll just answer that. Yes, you can. You can invest in REITs, you can invest international, you can invest in large caps, mid caps, small caps. Any of these stocks, as long as they meet halal investing requirements. We're going to come to one last question. It comes back to rental property. Do you pay zakah on the rental income that you hold less than a year? So if you generated rental income, let's say, but there's costs and expenses at the end, you have less, do you pay zakah again on any amount that you hold less than a year?
No, so you wait until the howl. Let's say you earned that money. From the time you earned that money, whatever left after the howl, then that money is zakatable. So you pay the zakah on whatever remaining. So let's say you paid property taxes, you paid expenses, you paid insurances, all these expenses, you already paid it. If it's not paid, but it's due before the howl, then you deduct it. If it's not, if it's due after the howl, then you cannot deduct it.
Okay. Well, with
or
that,
maybe in this case, what you can do, you can choose to prepay. I mean, you don't have to wait. I mean, you can really like pay these expenses right away and deduct it from your money. I mean, it would be possible. It would be acceptable to do that also.
Okay. With that, we will wrap up this presentation. We appreciate everybody who was able to join us. We hope that this information was helpful for you. We wish you all a blessed remainder of Ramadan. Inshallah, we will hopefully be ending this month with a lot of blessings. Again, if anybody has any other questions, you can feel free to reach out to us directly at Azzad. With that, again, thank you very much. Assalamu alaikum.
Thank you. Assalamu alaikum.